Hey, good evening, everyone. Hope this video finds you great. Hope this video finds you well. I'm excited for this one because just like the video I released a little bit last week, this is going to be talking about my Robinhood aspect of the portfolio, something that I've had since all the way back to 2014, believe it or not. We'll go through the history of that. It's not very exciting, but it's 5 years or maybe even more of history that you guys can see. And the fun part will then be after that we'll actually set up the automatic distributions into the portfolio so that we can continue to add different stock positions. Now, the nice thing about Robinhood is now they do have fractional shares, so that's something we'll get into a little bit as well. And if you guys always want to, I have the sign up code down in the bottom if you guys are interested in signing up for Robinhood and you haven't seen something like this before. I'm generally, I would say, late to the trend on Robinhood, although I signed all the way up back in 2014. I never really utilized it, and we'll get a little bit more into that in a second. But looking in the actual portfolio, which Robinhood actually isn't on here, so the 40 or so dollars that is in the Robinhood portfolio at the moment, not in the total portfolio. We're up to 403, almost $404,000 in the portfolio. Just added some Wells Fargo today after the earnings miss, and that allowed me to purchase another 30 shares, which was good for, I think, just over $60 or so a year in dividends, which is cool. That puts me over $500 a year in total dividends coming from Wells Fargo. I think at the moment I have 252 shares, or just about 252 shares of Wells Fargo. So I think it's my biggest holding in bank stock at the moment. And I did some calculations just because it's yielding about 4%. Every quarter, if it's yielding that, I'll be able to get another 2.5 shares just in reinvested dividends coming from the dividend that I get from Wells Fargo on a quarterly basis. So that's pretty crazy if you think about it that way, because I'm getting almost 120, $130 or so from dividends. And then, of course, if the stock price stays at $50, that's just over 2.5 shares. So, as you guys know, energy, heavily invested in energy in the position. But that being said, in financials in the portfolio and real estate in the portfolio kind of catching up. Real estate is somewhat shrinking a little bit, but financials is kind of holding its own. What I'm thinking about doing, and I'm not going to guarantee if that's what I'm going to do, but you can see that these three are obviously taking up the majority of the portfolio. So you have three pieces of the three sectors in the portfolio that are actually eating up almost 50% of the total value of the portfolio. I already have DRIP or dividend reinvestments on energy stocks mostly turned off already. Financials, I'm also considering doing that, and then potentially leaving them on for real estate, but that's just something else. But in terms of dividends, I mean, almost 30% and by itself is coming from energy, and 17%, so almost a fifth of the portfolio of dividends is coming from financial stocks. So, and once again, just with consumer staples, energy, and financials, we're over 50%. And same if you were to take out consumer staples and look at real estate, that's over 50% of dividends coming from those three sectors as well. So heavily disproportionate in these three sectors. It's something that I would like to sort of round out the portfolio about in terms of what else I can invest in. Huge things that are lagging behind at the moment. Obviously cash is something that I'm kind of getting myself up to speed on, almost up to 7% in cash, almost 8% in cash rather. Utilities are still less than 1%. Materials, which is only my investment in BHP Billiton, or ticker symbol BBL, is really my only materials position, and that's less than 3% of the portfolio as well. So those are the two really lagging behind sectors comparatively to the rest of the sectors. But then you also have information technology in terms of the dividend aspects coming in at less than 5%. So those are the ones that are extremely lagging behind, but healthcare is kind of grown into its own. Industrials, while it's still a little low comparatively to the others, if I were to just even out a little bit in terms of the energy position, financials position, and the real estate position, I feel like that the 7, 8% and this 6% would kind of come into line with what's expected, whereas the materials and the utilities and information technology might need actual capital in order to even them out. I think a lot of this is being drowned out because of the overbalance within these sort of sectors. And so if I either continue to invest only in these sectors, or if I sell a small amount in these sectors at maybe these overvalued prices and look for bargains within these sectors, it may be beneficial. But I don't necessarily know if I'm going to do that because there's some other things that are happening in the portfolio as well. So actually getting to Robinhood, the fun part here, apologies if some of this stuff is blurred out, but as you guys know, actually, let's go to the actual account and the actual value first in terms of what actually makes it look really pretty. So give me a second while I get that aspect of things set up. So actually looking at the graphic, let's go all the way to all time. So you can see back all the way in December of 2014 is when I got this bad boy started off, and started off with 30 whole dollars here from my Wells Fargo account. And then I sold out for a while. I wasn't really in trading too much in 2015 into early 2016. And then I kind of kicked it back off again, got all the way up to almost doubling the money, up 111% by the middle of 2018. And then it really started to come and trickle down into where I am today, which is just under $42. So in the moment, the only things that are really in here are a share of Kinder Morgan and a share of Teva Pharmaceutical. Now, those were not the original purchases that I had in here, and we can actually go into what actually was purchased. So let's go ahead and sort of do that if I can find my way in there and actually look at the history of things. So let's scroll all the way back to back in the day when I deposited my $30 on December 20th of 2014. That was a blast from the past. So this is kind of when I started getting my investing journey underway. If you kind of can bear with me, I started working in August of 2013. So a little over a year after that. Granted, I was investing in Fidelity back in 2012 timeframe when I was an intern. That's a different story for a different day, but you can see that this wasn't my first account, and so that's probably why I didn't really stick with it. But you can see with that $30 that I invested in December of 2014, I purchased 4 shares of Petrobras for 728. So PBRA, I remember the position, and then about 5 or 6 months later, I sold it for a nice $9 profit or so, for almost a $2.25 gain per share. So nothing too crazy, almost a $10 gain there. And then I purchased, and what I was trying to do was, well, hey, if I don't have too much to do or that much money in here, let's get a little bit crazy with the natural gas position. So I remember in 2015, 2016, natural gas was back down to almost $2 or maybe even less at Henry Hub. And so I was trying to trade a little bit from here. Didn't end up doing too well in that respect, and ended up also buying a little bit of Bank of America. So had some dividends start to roll in here in mid 2016. Bought some Seadrill partners as well, hoping for that dividend payout. And I was getting that dividend payout, believe it or not. And eventually sold my shares of a Bank of America for about twice what I bought them for. So bought it for just under 26 bucks, and I sold it for just over 48. So almost 100% return on those Bank of America shares, and it was paying me a decent dividend. I mean, 15 cents every single quarter. So just from that alone, I made about 45 cents or so from dividends, because I got paid in September 2016, December 2016, March of 2017, and June of 2017. Sorry, forget that February of 27. Anyway, so yeah, got paid 3 different dividends from Bank of America, which was cool. And also, I guess, June of 2017. So even after I sold, the next day I got some shares, or some dividends rather, from that, because I had sold it after the ex-dividend date. I also was getting some dividends from Seadrill partners, and then eventually I think they just went away because of all the reverse splits and everything, but we'll get into that a little bit. Purchased some Kinder Morgan shares when they were down at about 18, almost $19, which was awesome, and some Teva Pharmaceutical when I thought it was cheap at about 15, and why I was wrong with that, and some Annaly Capital as well. So these two didn't end up staying that price, and so what ended up happening was, I think this was around the time, this mid 2017, 2018 time frame, when I was actually up, way up in terms of how much I had. I was almost double the portfolio size from 30 bucks to 63. I know it's not a lot, but just giving you guys a little rundown as to what happened. Was getting my dividends from Kinder Morgan, Seadrill, Annaly Capital, and then I think eventually it just started to tank. Annaly started cutting the dividend. You can see how they kind of split it here, and it just didn't end up going pretty for that. And then same thing with Seadrill Partners. Seadrill Partners also did not do too well. They also cut the dividend. You can see we went from 10 cents every single quarter to 1 penny a quarter. And I think eventually, I think my Seadrill partnership, I didn't sell it. So I think what ended up happening is the reverse split was just so bad that they just got rid of my shares in the portfolio. So I mean, I didn't even see like a market sell or anything like that. I think it just because I had one share and they did a reverse split. I mean, I think they just got rid of it from the portfolio. But you can see the Kinder Morgan dividends have gone from 0.125 or 12.5 cents up to 25 cents. You can see I started to try to trade an options contract for oil here. That didn't turn out too well. I expired with basically no money, so I lost money on that. But then I also sold Annaly Capital, I guess, a month or so ago, because basically I was just hanging on for the dividend and I didn't even know I had it, to be honest, anymore. So at this point, as you remember, I just have the Tiva and the Kinder Morgan stock at the moment. Both are at about break even in terms of what I bought them for, from with respect to all the dividends that I've gotten and what have you. So that being said, sitting about 76% in cash and, or sorry, 23% in cash and 70 so dollars or 70 so percent in terms of stocks. Portfolio value is only at $41. So that being said, I want to actually increase this to about $250 every half month. So what I could do is actually go to the banking aspect of things, and what I want to do is I want to do an automated transfer, and I don't know if you can do that within here, but let's see if you can. So obviously I want it to go to my Wells Fargo, and let's do $250 every month. And can you choose when it actually goes in? Bi-weekly? Okay, this is what I want. This deposit will be initiated on the 1st and 15th of every month. This is perfect because if you watch my M1 Finance video, I get paid on the last day of every month and the 15th of every month. So $250 every other week, I guess, is absolutely perfect for me. And so I don't necessarily know if I want to go more than $500 every single month or so, but we'll see how things go in terms of how things come along. I still have to manage some things. M1 Finance is getting ramped up. I might be leaving to go back to the U.S. or a different country with work in a couple months. So a lot of different things are going to be shifting. So that means I need to have a little bit more working capital in my checking account in case I need to move some stuff. So that being said, I need to just be careful at the moment. I would love to immediately ramp this up to 1,000, and I know for a fact that I'd be able to afford $1,000 right now every single month into the Wells Fargo account or into the Robinhood account. But I think what I'm fearful of is in the coming months, later half of this year, when things start to get a little bit hairier in terms of anyway, so that is what it is. We're gonna see how this kind of progresses going forward, but so far so good in terms of getting two different portfolios set up for say M1 Finance as well as Robinhood. So those combined, M1 Finance is going to be about $500 a month. So we're going to get at least $6,000 this year added to the portfolio. So the goal for M1 Finance will be $12,500 to $20,000 by the end of the year, and this will also be about $500 a month. So this will be hopefully to getting to about $6,000, maybe to $10,000 by the end of the year. I do get a bonus in March, April timeframe, so that might also help, but I don't really want to cheat in terms of getting these things up ahead. But what I could do is maybe up the amount that I'm contributing to. Instead of only being $250, maybe with that bonus I can get a little bit more lenient, as I have that little wiggle room towards the middle of the year when I'm moving, potentially going back to the US. and I can keep that kind of as cash in my checking account or in my savings account and up, let's say, the Robinhood contributions to $500 per pay rather than the just $250 per pay. So expect by middle of next month or the next update here that you'll see another $250 in the account. Really hope this hits home with you guys, because it just goes to show that even $250 a month can make a big difference, and you'll see that, I guarantee, when we go through this Robinhood 2020 challenge. And also with the M1 finance piece, it's not going to be, you know, tens of thousands of dollars that I'm adding every couple months like I do in the majority of my accounts. It's going to be $500 here, $250 there. And hopefully that's more relatable for you guys to understand that all you need to do is start with 25 bucks, and it can make a big difference over time. And I really wish that's something that I listened to myself about 5, 6 years ago when I started this account in 2014 timeframe, that it doesn't take much and you can add up a lot. You can see that even just from 4 years of starting in December 2014 to middle of 2018, I doubled my money. I wasn't even trying, I wasn't even paying attention. And then I purchased some really stupid investments, some risky stuff that I knew I shouldn't have bought. But I said, hey, it's a Robinhood account. All I have is 60 bucks in here. I blow it up, it's 60 bucks. And that was the wrong mentality. What I should have done is nurtured it, gave it a little bit more fuel like I'm going to do today, and things would have definitely drastically changed for the better. But instead, I have to now play catch up in the Robinhood aspect of the portfolio, and that is what it is. So, as always, I really hope this video finds you great. Hope this video finds you well, and I will catch you on the next video. Cheers.